Hello dear friends, as always, I am here with a trading strategy that I have tested for a long time, and that can achieve both practicality and high profit margins. I would like to emphasize that I do not write unrealistically high profit margins just to increase subscribers for the strategies I present to you, because I do not think this attitude is honest. In fact, before preparing any strategy training videos, I test some trading models extensively and turn the most profitable and easily applicable one into a video. Please note that no strategy model can provide 100% profit. I strongly advise you to stay away from those who talk about profit rates in this way, because if you apply the trade presented in this way, it will inevitably lead to completely depleting your capital in a short time. Now, before we move on to the trading strategy, don't forget to subscribe to the channel and press the like button. If you turn on the notification bell, you can be instantly informed of my most accurate, simplest, and truly profitable videos. Thank you, and let's get started. We are adding the indicator called 520 seconds cross by Bistatic, which is located in the Indicators tab of our chart. This indicator is a version of the classic moving average lines with integrated buy, sell signals. To buy, sell signal labels can be preferably turned off, because they only appear at the points where the 5-parameter moving average line intersects the 22-parameter line. For those who do not like the clutter on the chart, it can be turned off. Now we will learn the rules of our trading strategy. Rule 1 for short positions. Firstly, the white 5-parameter moving average line must cross the 22-parameter black line downwards. Rule 2. The candlesticks representing the price must make a pullback from bottom to top towards the moving average lines again, and form a bottom level. Rule 3. A support line should be drawn at the formed bottom level, and it should be waited for the line to break to make sure that the trend is turning downwards. Thus, the possibility of falling into a bear trap is reduced. With the break of the support line, the first closing candlestick will be the level where we enter the trade, and our target is a 1-to-2 risk-reward ratio. The stop-loss level should be above the last swing high. Now I will show you a few consecutive trades on the chart that follow the rules for long and short positions. This way, you will witness with your own eyes what percentage of profit or loss is achieved with this strategy. Of course, don't forget to subscribe, hit the like button, and turn on the notification bell. Now let's look at the trade examples in the series. Please examine them one by one without skipping, and see how to grow your capital with your own eyes.